or a special someone. The song, the time I hear him, long time. Yeah, but it's still a banger. All right. Anyway, so we get into our roundtable discussion for today, and today we're turning our attention to the equities market. And like I indicated a while ago, we're seeing a very remarkable performance with the Ghana Stock Exchange, recording a strong, year-to-date gains. I think about 70% or so, which I'm told is largely, or I've read, is largely driven by impressive performances from financial sector stocks. Now, the rally has actually, sparked some renewed interest in the capital market and raised questions about what is behind the surge in investor confidence. But beyond the numbers, what does this mean for the average Ghanaian investor? Does a booming stock market signal some stronger economic prospects? Is this the right time for people to, or for more people to consider equities as part of their wealth building strategy? And can this momentum even be sustained? These are some of the questions on my mind. And so today we're looking at Ghana stock market boom and what does the rally mean for investors and the economy. My guest is seated. His name is Ebenezer Odum. He is a financial analyst, and he joins me in studio for this conversation. Eben, good morning. Good to see you today.
Good to see you too.
I hope you're doing well.
Yes, I'm doing well.
All right, great.
Right.
Good to have you. So, we're talking about stock markets. I mean, I know how much you are, very interested in what exactly is happening there and all of that. Now, we've seen 70% year-to-date gain. Of course, it's being up and down, but currently that is where it is. My first question to you is that what are the factors driving the strong rally?
Right. So, a very good morning to our listeners once again. The market has been quite interesting so far this year, and it's been exciting as well. Given the fact that it's rewarding investors very well. Now, what we have seen to be the main drivers of what we are seeing now in the market is, one, the fact that majority of the companies in the market are now doing well in terms of financial performance. We've seen them grow their revenues, keep their bottom line, that is profit after tax, quite stronger compared to previous years. And the moment you have majority of the stocks, especially the most traded ones, doing well, clearly the market is supposed to respond. And the fundamentals of the market is that investors will tend to keep eyes or focus on companies that are doing well, because at the end of the day, it is when the company does well that they can be able to pay some of these profits to them in terms of dividends. So that is one of it. The other thing is that the market has also benefited from a season where the other investment option, i.e. the fixed income options, the treasury bill, the bond, the fixed income market broadly, is seeing a deceleration in returns or yields.
Right.
And that is on the back of the improving macroeconomy that we are seeing. And so with the fixed income side of the investment segment declining in yields, clearly investors will tend to diversify into the equity area.
Absolutely.
And more specifically to companies that are showing good prospects and have demonstrated good performance. And the other thing is that, these companies' earnings, for instance, came with some good dividend declarations. So we've seen an improvement in dividend declarations and payments in this year compared to last year and the year before last year as well. So companies are doing well, and for that matter, they are paying dividends. Again, we also have a fixed income market that is declining in yields. And then the time has also been met with excess liquidity in the market, i.e. if you look at the trajectory in the last 3-4 years, the government has not issued bonds, right, until early part of this year that it issued about 2.7 billion. So if you look at the investment offerings and how they have been made available to investors, the fixed income side was narrowed to only treasury bills from the government and a few corporate issuances. And the stock market side Of course, there were no issuances, but at least there were about 38 companies available to, inject something in. And so clearly we saw some of the excess liquidity tilting to the equity market. And so if you look at activity level, for instance, you could see that so far this year, the value traded in the market has been about, I think it's about 3 times higher than what was traded same period last year.
Wow.
So clearly you see that a lot of funds or a lot of liquidity has come to chase stocks in the market, and that has because we have good companies now producing dividends and returns. We've seen that yes, investors have decided to price in with the liquidity available, pricing the stock at levels that we have not seen in the past few years.
How does the current performance compare to what we've seen in previous years?
Well, so last year, the whole of the 12 months, January to December, was about 79%. And now we are in the 7th month, mid of the 7th month, and we are doing 70%. So we are almost close to last year's 12-month performance. If you look at 2024, we also did 56%. And so at least in the last 3 years alone, it's been a positive trajectory.
Right.
And that is good, I mean, for investors. So clearly from 56% to 79%, and in the 7th month of 2026, we are doing 70%. That is quite impressive. It was somewhere at the height of the crisis period that the market recorded a loss of about 20%. But broadly, if you look at the stock market trajectory since the inception of the stock exchange, you see that the gains has been more than the losses, and the gains have been higher compared to. So in terms of downwards, normally when years that you see the stock market recording losses, you see that it is sticky compared to when it is going up. So when the momentum or the companies are doing well, it goes up so well, but when it is coming down, it is a bit stickier, So compared to previous years, this year appears to be outstanding. Last year was also outstanding, but this year appears to be more outstanding in terms of activity level, in terms of market depth. At least we are seeing 2 new companies join the listing universe. And then we are seeing activity level jump about 3 times. We are seeing in terms of transaction improve individual participation, dividend declaration and payments. We are seeing a lot more companies are now paying dividends. So some of these things have anchored the patterns that we are seeing so far this year, which makes it remarkable.
How do we also compare to other African markets?
So our market in terms of size, especially sub-Saharan Africa, appears to be a bit smaller. I mean, relatively in terms of the market side. I mean, currently we are doing a little over $20 billion in terms of market size compared to Nigeria, where we're higher than us, compared to the BRVM market, which is the Francophone stock market, which is for different Francophone countries, where we're higher. But in terms of performance tracked by the market indicators, clearly Ghana's stock market has stand out. I mean, if you look at last year, for instance, the Ghana stock market was about 79%, and that was the second highest in all of Africa.
Wow.
Following, I think, Malawi. The Malawi stock market, we recorded over 200%. And in dollar terms, we're doing over 150%, I mean, for Ghana stock market. But in terms of West Africa, Ghana dominated in 2025. So far in 2026, Ghana is still dominating.
Wow.
And 70%, the Nigerian market is nowhere close to that. You know, the VRM is also nowhere close to that. Last year, the 79%, I think the Nigerian market recorded about 55%. You know, the BRVM was about 25%. So, you know, in terms of performance, clearly you could see that the Ghanaian stock market is rewarding investors very well. And now that we have a broadly stable cedi or local currency, the dollar returns are well protected, because now you don't have a cedi that will depreciate anyhow to affect your local unit return. So in terms of dollar returns, we are still on the high side, right? In terms of, we are still on the high side, and then clearly that makes a case for external investors who are in the market, at least when it gets to repatriation period, their returns are not dwindled by the exchange rate depreciation. So impressive performance compared to West Africa and all of Sub-Saharan Africa.
But so what we are seeing, are we seeing a genuine market recovery, or you would say maybe it's a correction after what we've seen in the past?
Well, so I mean, during the crisis period, if you look at the market trajectory, you see that the Ghana has been through different cycles. I mean, from the banking sector cleanup in 2018, we zoom into COVID, post-COVID, at the height of our crisis, there was debt restructuring, high inflation periods, businesses were, borrowing at high cost and all of that. And 2024, the recovery began. And in 2025, we saw most of the companies in the market leveling up. And if you look, for instance, in the financial services space, which dominates the market in terms of listing count, 2025, almost all the banks in the market were now compliant in terms of capital adequacy. I mean, by what the Bank of Ghana require of them. And so, and they were also building their reserves, improving on profitability, asset quality. I mean, about 90% of the banks were doing well in terms of asset quality, and were now competitive, in terms of the market. So what we have seen, the companies now benefiting from the stabilizing macroeconomy, I mean, broadly the stable macroeconomic environment, and then that is translating into their financial performance. And then we are seeing it in the market for what investors are offering for the different stocks. So I believe that now we are even witnessing a growth and a much more strengthening or resilience building up in the market across the companies that are listing. So yes, the recovery period was fully 2025, where we saw most of the companies return fully into profitability. I mean, comfortable profitability, where they could pay dividend out of it with no shakes and all of that. So that has been the dynamics, and I think that the outlook looks good as well.
All right, so let's talk about the financial stocks. Now we understand that financial stocks are leading the rally. Why is that? Or what exactly is happening that is making that possible?
Right. So if you look at I think so far for the financial services company, about 12 of them are in the market. That represents more than 30% of the listing universe in the local market. Now, anytime the financial services are doing well, you could see that it is reflecting in the overall market performance.
Is it because of the numbers?
Exactly. So, I mean, they are all in one industry, and most of the risks that they are prone to are systematic in nature, in the sense that when it is affecting one bank, almost all of the banks, So when, for instance, in 2022, when there was a restructuring and most of the banks have to revalue their investment portfolio, and you saw the losses that the banks recorded, nearly, majority of them recorded losses. So, for instance, when lending rates are high and it is affecting loan performances, you see that across the banks, right? Maybe one or two you can separate and say that these ones are standing out. But then, because they are all in one industry and most of the risks that they face are systematic in nature, at the end of the day, when they are doing well, you see that majority of them are doing well. And we have seen the banks transition from struggling to comply with, one, on capital adequacy levels, two, on asset quality levels, to now being fully compliant.
Right.
And if you see the companies, the financial services companies in the stock market, you see that from the beginning of 2026, nearly all of them were compliant on capital adequacy levels. I think just about one or two were struggling with high NPLs. But as of June, we see that most banks are moving to just some early teens non-performing loans levels, their capital adequacies have strengthened to the Bank of Ghana required benchmark. And so the banks are now, breathing well, right? They are doing well. And by that, investors are giving it the value that it deserves, because the banks are highly regulated by the central bank. Anytime they are not doing well, you see that it is affecting the overall stock market performance. So we've seen the banks do well, and I mean, tell you what, now most of the banks in the market are paying dividends, right? Most of them are paying dividends, and some of them have come from not being able to pay dividend in the last 3-4 years to now announcing dividend for the very first time. So clearly, investors' attention will be directed towards that angle, where now you see a bank that struggled with high non-performing loans to now a level where it could pay dividend to you. And so this has been the outcome. And if you look at the insurance space as well, it's been interesting. They have also benefited from the stabilizing macroeconomic environment, and we see that translate into their financial performance. And investors are repricing the stock at levels that we have not seen before. So see financial stocks down 200%, 150%, quite impressive. And it is translating to the overall market returns that we are seeing so far.
I see, but how much of or how much influence did recent developments in the banking sector have, on investor confidence?
So, I always say that the banks are the center of the overall economy and the overall investment space. So, when you have the banks not doing well, typically you see that the economy is also having challenges.
Right.
So, because at the end of the day, the banks are, at the center of everything, and they are facilitating the movement of funds from those with excess to those who are in need. And so, typically, when the banks are doing well, it means that businesses are doing well. Now, with the banks, which form majority of the listing universe, returning to this level of performance we are seeing, what it is that now you have a broader scope of performing companies to allocate funds to consider when you want to invest. And typically, when the banks are not doing well in terms of underperformance, what it is that because when the banks are doing well, it means that they are able to well finance manufacturing firms and other firms who are in the market. So if the banks are not doing well, sometimes you even see that the manufacturing firms are also struggling. So clearly, now that we see the banks doing well, it is translating into the other sectors, because the banks are now in a position where they're able to allocate more credit to these manufacturing and other sectors of the economy. So the bank's performance is central anchor to most of the things that we see. So it is a return in investor confidence in the bank. Because look, when you are buying stocks of a bank, it is not just the stocks you are buying. I mean, most of the times you are also a customer of that bank, right? Most of the time you're also a customer of that bank. And so if the bank is not doing well and does not merit you allocating your funds to it in terms of equities, most of the time you see that operation wise they also have challenges. And so the banks that we save with, we deposit our funds with, right? If we see them doing well, clearly means that our funds, as we are investing in equity, we also know that our savings, our deposits with them are also saved, right? Or are also well protected, exactly. So some of these things, has been the dynamics of the banks. And I always say that, look, the banks, as I said earlier, they are central to the economy, and we always need them to do well. So now what we are seeing, most of the banks, the environment is stable. People are able to pay their loans back to the banks. They are not struggling with high performing loans. Most of them are now well capitalized to levels that the Bank of Ghana want them to be, and that has been what has been the help for most banks that we are seeing and the performance. So it's good for the market, it's good for industry, it's good for investors. Investors should be confident, because if the banks are now producing profits, it means that, of course, they're able to do well with the deposit that you give them. They're able to maximize it for good returns.
All right. Even hold on for me. Let me just announce the lines in case anybody wants to join the conversation. Well, if you just tune in, this is Business Breakfast on Z101.9 FM with me, Nitrebi Hammond. And this morning we're talking about the performance of the stock market and exactly what it means for investors and, of course, the economy as well. My guest is financial analyst Ebenezer Odum, and he's in studio having this conversation with me. You're free to join us. Send us a WhatsApp on 0544321019, 0544321019, and I'd love to read your messages for you. And also, if you have questions, Eben will respond to all of them right here. Also, you can call us on 030-3956-641, 030-3956-641. And then we give you the opportunity to ask your questions or make your comments this morning. We're streaming live on Facebook at ZFMGH, and on YouTube we're at Z Multimedia. Please drop your comments under the live stream and we'll read them for you as well. All right, Eben, let's continue. Now, let's talk about what all of this means for the ordinary Ghanaian. Maybe there's somebody listening to us. I know we've spoken about stocks in the past and giving orders, but I mean, the thing about radio is that you always get new people listening. Yes. And so we'll touch on a few of the things about how to get into the markets and all of that. But what opportunities exist for people who want to get into the stock market?
Okay, so now we are saying the market is doing 70%. So that is on the average. And within that 70%, we see some companies exceed. In fact, I think of the about 38 different counters, we have about 27 of them recording gains. And about 10 to 12 of them are above 100%, way even above the overall market average. Now, we are talking of these important trajectories in the market, heightened activities. What it is that despite what we have seen, we still see opportunities in some of the companies. Of course, I would not be able to mention them directly here. We still see some of the companies yet to be fully priced to fully reflect the fundamentals that they are producing. And the thing is that it is 70% now. We still see opportunity for some of the stocks to jump up further going to towards the end of the year, because the first half of the year performance, the first 6 month performance, is set to be released in the last week of July. And we are expecting a number of the companies in the market to grow the top line, i.e. the revenues, grow the bottom line, i.e. the profits, and cash flow levels to improve. Again, we have some companies that are expected to declare dividends in this quarter, right? And so some companies have their financial year cycles end in June. And so in July, August, they are going to be announcing dividend payment. And then also the impressive performance, clearly after 6 months, if you are doing well, then it is giving us a direction is on where the year is likely going to end for these companies. And so this half of the year, or currently where we are now, is also coupled with portfolio reallocation, where people look at how their investment have performed in the first 6 months and they start to rebalance, reallocate, look at where it is not doing well to reallocate. And so clearly we are going to see a redirection of attention to some of the stocks that still have potential, that have not yet fully reflected the fundamentals to pick up. And of course, it might not be as high, the margins may not be as high as we have seen so far this year. Maybe a moderate, but at least from now to December, a 10 to 25% uptake is good to get, because look, you have the treasuries doing max 12% for the 1 year one. So if 6 months you have an undervaluation margin of 10 to 25%, it is good to participate in. So the opportunity is there for those who are still not in the market, who are here to allocate some funds to some companies. So, and the sectors are broadly, now we are seeing the OMCs now have 3 listings, The banks have also expanded. The manufacturing, FMCG have also seen additional listings. So the listing universe has broadened. And, some of these companies also have opportunities that investors now have to capture in this second half of the year and the performance that they are set to deliver. And so, yes, opportunities still exist for investors and the individual investors as well.
What are people missing if they are not on the market? And I mean, I'm asking this question not to, get everybody to come onto the market,
Right.
but just so that people can understand a bit better.
So a big cake has been shared, right? And then there's still more to be shared. A very big one. I mean, January to date, I keep saying and saying that, look, in terms of capital appreciation, right, we've seen that in excess of 100 billion cedis. So the size of the market at the beginning of the year, we've seen it grown more than 100 billion. I think we are doing over 110 billion in capital appreciation, which is one side of returns for investors in the equities or the stock market.
Right.
We have also seen dividend declaration and payments in excess of 8 billion cedis. And so all in about 120 billion cedis cake, all right, has been, made available in the first 6-7 months of the year so far. And you've not had your own share, as if you are not in the market. And we still think that towards the end of the year, at least there are some cupcakes. There are some cupcakes to be eaten, right?
Right.
We see some cupcakes. So that, presents another opportunity in this second phase of the year for investors to maximize. So if you are not in the market for the first 6 months and 2 weeks, you have missed over 120 billion size of returns that you could have benefited from. I mean, if yours was 1,000 cedis in excess of whatever you invested, or a 500 or a 2,000 or a 5,000, I mean, depending on your returns, it's still something. Yeah. It's better than keeping your money in a traditional account that offers nothing. So 120 billion cake size rewarded to investors in capital gains and dividends. We still see some cupcakes going to be available in this second half of the year. And it offers the opportunity, at least if you didn't get your own share of the bigger cake that we have enjoyed, the cupcakes, come and get some small one, and then, enjoy, so that at least your Christmas will look good. So that is basically it.
Okay. Sorry. Maybe there's somebody listening to us who's asking that. So how can I get into the market? Maybe run us through that briefly and then we can move on. Yeah.
Right. So, the process in buying stocks, thankfully, due to tech and the regulators and the market, institutions, everything has now been formalized and it's simpler now. So typically to buy, I mean, for new entrants, you need to go through a broker, and brokers are the institutions that are licensed to help you buy, or to buy on your behalf and to sell for you on your behalf as and when you want to. And there are about 26 of them in the market so far. So when you contact a broker, and you can go to the Securities and Exchange Commission's website and you find all the brokers there. So you contact a broker will help you create an account called a CSD account. Basically, it's just like creating a bank account, but the CSD is like a record account that keep records of your investments, So if you contact a broker will help you create this account. And if you can make all your information, just like creating a bank account, your traditional Ghana card, your passport picture and all of these things, bio details, if you can make it available to them, max in a week, the CSD account can be established for you. And then from there, the broker will ask you to fund your account, deposit the equivalent of whatever you want to buy. You want to buy a company A, company B, 1,000 cedis, just fund your account. And then you can request your shares to be traded. So you can request that, okay, you want to buy 1,000 cedis equivalent of company A, or you want to buy maybe 500 shares of company A. And the broker will go to the market, execute it for you, and get back to you with your contract note, more like a receipt for whatever you bought. And these simple steps, and within a week you can get a broker, create an account, order for shares, and it will be bought for you, and you get your contract note. As simple as that. So,
and even today it can be done, I mean, with a simple app and all of that.
Exactly. I mean, there are some brokers with web apps, platforms and apps and all of that. You can, at the comfort of your home, just send an email, or when you get on their app, set up your account, wait for the CSD to be created for you, fund your account, and then request for what you want to buy, and then the broker will get it done for you and get back to you on your contract note and watch your stock perform.
What should a first time investor know before they buy shares?
So, generally, when it comes to investment, you look at three things. One, the returns. How would you make money if you invest in the stock market? So the first question you should ask. And the answer is one, when the company makes profits and pay a portion of that profits to you, because when you buy a share, you are a shareholder, you also have entitlement to a portion of the company's profit. And so when the company makes profit and declare to pay some of the profits to owners of the company, you benefit from it. So that is one way. And there's also another way called capital gains, where the price at which you bought the stock, because the stocks are traded in the markets, the demand and supply forces causes the price to either move up or come down. So if the price that you bought the stock, right, the price appreciates, you technically have what we call capital gains. So for instance, at the beginning of the year, a certain stock was like 4 cedis, 20 pesos. As at today, the same stock is 6 cedis, 57 pesos. And so that is clearly over nearly 50% gains in that stock. So if you invested in that stock, it means that the value of your investment has appreciated, together with when the company distributes profit, you get your share. So that is on that side. You need to know return, what comes to you as an investor. And it is important to know that all of these ways you make money are not fixed like other investment options. So it is not automatic that at the end of the year the company will pay part of their profit. It depends on what management strategy is. And also it's not automatic that the price of the stock will go up. When the fundamental justify that the company's price go up, it will go up. So that's on the return. The second thing is, okay, what risk are you taking? So return, risk, the second R. What risk are you taking? Basically, what could vary your expected return? What could vary? Basically, like I said, what will cause your return expectation not to be met,
right,
whether to fall below or above it? And so now in the stock market, when you invest, of course, one of the risks is that when you want to now cash out, maybe sell some of the shares that you have, and there are no buyers for you, or there are not enough buyers. So maybe the ease at which you can cash out, right? So there is that, okay, you want to sell your stock this week, it could take like a week for you to sell. And within that week, if the stock drops, then, so the probability that the price will come down, right, that is one risk that you are taking. So you bought it at 1 cedi. If the price go to 80 pesos, that means that your value has come down. There's been some small capital loss, and that is one of the risks. And
in those instances, if you leave it there, chances are that it can also rise, isn't
exactly,
it?
Exactly. Even the gains, once you still hold it, it's like paper returns, right? So far you still hold it, it's in paper form until you sell off, that you record the loss or the gains. So that is basically it. So the risk is that, okay, the price may go down and you may lose a portion of it in terms of mark to market or prevailing market prices. And then the other thing is liquidity, the ease at which you can have your money. If you want to have your money back, how easy it is for you. Right? Is it easy to sell the stock quickly and then get your money back? And the market here has a a T+3 settlement rule. In other words,
What's
when
that?
your shares are sold today, it takes 3 working days for the money to get back to you.
Okay.
So that alone is, there's a 3-day delay. So plus the number of days it may take for your shares to be sold for you, i.e., if the stock is not one that it is often traded, right? So that is the liquidity side. So once you understand the return, what will come to you in terms of return, the risk you are taking, which is the probability that the price may go down, and then also the ease at which you can have your money back or liquidate some and have some returns. Once you understand these 3 things, you sync it with your capital or whatever you want to invest, and then you know that, okay, for this money I want it in the long term, and I don't need like overnight like a normal bank savings or current account where you can just dial Momo, or you can just pull it from your bank app. This is stocks. Even when you sell now, it takes 3 days for the money to come back. And so you need to have this basic knowledge, and you need to know that the market's performance is based on how the companies perform, right? So when the companies are expected to do well, investors try and then move more money into those companies so that they can benefit from the potential returns that they will come with. And the companies are not expected to do well, the opposite. And all of these, the brokers will help you to understand the circumstances around each company at every point in time to know whether at this time this company has good prospect and I should buy or I shouldn't buy. And every broker has a research unit to guide you, to give you information to help you make the right decision.
Where do you get that research? That data. Where do you get the data to make those decisions?
So thankfully we have a good stock exchange managers. They make these data available to all the brokers. So every broker, I believe, publishes daily the stock market, what happened, the shares that traded, the ones that recorded movement, gains, losses, and all of that. So the stock exchange specifically sent the daily market data where you will see the stocks that traded, how much was traded, how many units was traded, and all of that. They send it directly to the brokers and other market participants and the institutions in the market. And then from these data, the brokers and other institutions, they generate daily reports, weekly reports from it and make it available. And so just get your email with a broker, and then you receive daily stock market feeds and all of that. And we also have the GSE has published the stock market watch, where on the day you can go there and you see how the market is moving. Exactly. So you see the top gainers, top losers, the volume traded ranking and all of that. You just have to go to GSE stock market watch and you find the data directly from there. Otherwise, be in touch with a broker or another institution in the market and they will feed you with the data. Just contact them. They will make it available for you.
Right. I want you to speak to young professionals and small investors. How can they build wealth, or how can they create wealth through the capital market?
Yeah. So when you make money, you manage, you grow, right? The growth aspect is where the stock market lies. Now, for instance, if you look at the trajectory we have seen, 70% return in overall. In the midst of this, we've seen companies, do 760%. Let's use the average 100%. Now, consistently, if you have allocated, let's just assume that you started investing in the local stock market, and I'll use the overall stock market return, right? In 2024, 56%. So that means that your 1,000 cedis recorded averagely 560 cedis in gains. So beginning 2020, that's in 2024. Beginning 2025, your 1,000 is already 1,560. Now, from 1,560, in 2025, the market recorded 79%. So assuming you did not even top up, your 1,560 has now grown by 79%, which is over almost 900 cedis. So now you're already in the 2,000. Right? And then January to date, we are doing 70%. So your 2,000 plus another 70%. So 1,000 cedis in 2024 has grown to almost 3,000 cedis by now. That's using the average. And if you talk of diversifying into some of the best performing companies that are seeing 100%, 200%, 700% returns. It means that your wealth would have grown, quadrupled in the last 3 years alone. And so clearly it is an avenue for wealth creation. And look, if you look at, for instance, a company that has recorded 700% from January to date, what it means is that your 1,000 cedis has grown to 8,000. Plus 7,000 cedis in returns or in capital gains. So if you're a young professional, entry level employee, or a young person, and all you can do, like most of us do, like your 1,000, your 500, your 200 cedis, if you can invest it in the stock market with the guide of the analyst in the market, you can always diversify and benefit from these gains year on year. And what I have seen is that people don't wait for their wealth to grow, right? And most people, when they get the gains, they sell off those and recoup those gains. So leave it. Dedicate a portion of your investment to growing in the long term. So like I use the 1,000 cedis for an example. If you had left the 1,000, it would have grown to averagely 1,560 to 2,000 to 3,000 in excess by now. So leave your funds to grow. And when you have an advice that, okay, a particular company is not doing well, you can sell off and redirect it to another company. And there are over 30 companies in the market. You can always find companies that are doing well. And even during years that the overall market has been negative, you still see companies do 50%, 20%, 25%. So there are always companies to and the stock market will offer you that wealth that you seek to create. And say, look, if you had 1 million cedis at the bank and it was at the bank in January, it's still 1 million cedis. Maybe if you're lucky and they did some product for you, you could have seen some small returns. But there are companies that if you had invested that 1 million cedis in the stock market, you would have seen 1 million cedis in additional returns. There are companies that if you had invested, you'd have seen 2 million cedis in additional returns. And that's how impressive and rewarding the stock market has been. And we think that, yes, the opportunity is there, has always been there. And every now and then, when people are afraid, take advantage of the little opportunities that are in there, and then maximize returns. Don't keep your money idle, as I usually preach. Don't keep your money idle.
Right. Very important. So maybe a few things and then we can go because our time is up. But if you're listening to us, you can send us a WhatsApp now. If you have questions, send it to 0544321019, 0544321019. I'd love to read all your messages for you this morning. You can also drop a comment under our live stream. We're streaming live on Facebook at ZFMGH and on YouTube at Z Multimedia. Please drop a comment there and I'll read them for you. Eben, I said we're also going to talk about what this means for the economy. Tell us, what exactly does this mean for the economy generally?
Okay, so, in fact, most economic watchers have said that once the stock market of a particular country is doing well, clearly you could see that the economy is also doing well because the stock market is in the economy. And the stock market is made up of companies in the economy from different sectors.
Yeah.
So if you have the overall market delivering, for instance, 70% like we are seeing, it means that majority of the companies in the market are doing well. And the companies will do well in a stable macroeconomic environment, when, for instance, they are not struggling to get credit, when they are not, burdened with taxes, when inflation is not eating up their margins and all of that, when expenses are not eating them up and all of that. So to the economy, the booming market also means that investors are now looking in the market,
right.
And it offers companies that need capital an opportunity to, get access to long-term capital to expand. And raising capital in the stock market, you may get it at a very cheaper price, better arrangement in terms of credit quality. You have it in the long term and all of these things. So the economy offers, the stock market offers to the economy for institutions in need of funds an opportunity to raise more capital, to expand, to embark on that big strategy, big project that they want to do. And also investors, of course, are fairly rewarded, 70%. Now, Ghanaians are keeping real returns of over 60%. I mean, in terms of what the stock market is offering. And that means that the purchasing power of investors are increasing. I mean, your 1,000 cedis is now doing average like 7,000 cedis. Or I mean, if you have done 50%, your 1,000 cedis is giving you in excess of above inflation. And so your purchasing power is doing well. Your wealth has grown. You can be able to do more with your money compared to the year before, right? So in terms of the economy, broadly, it means that things are stable and the companies are benefiting from that stable environment. Companies now have opportunity to raise more capital. Individuals are making more money to themselves, and that we see it. That generally people are able to take initiatives, embark on projects, start new businesses, and all of that. So, yes, a lot. We need the market to do well because it also allocates capital to institutions or companies in need of capital.
Right. So we're seeing a 70% year-to-date gain. Is this rally sustainable?
Well, we think that given that most of the companies now have a breathing room, and more importantly, the fact that the financial services sector is stable, so long as the companies continue to deliver to investors, right, we are still going to have investors pricing the stock to reflect these fundamentals.
Right.
If you can continue to produce a profit, generate the cash flow, if you can continue to pay us the dividend every now and then, when we get the funds, we will come and allocate to you. And so the sustainability of the market momentum is tied to the sustainability of the business performance, right? And so once the business will continue to do well, the confidence will be sustained, right? So, and it is also tied to how the macro is going to be stable. And we think that in the medium term, at least for what we have seen and the momentum we are seeing, we think that the macro will be maintained, the macro environment will be stable over the medium term. And we expect that the companies will continue to do well, but maybe not in significant returns like we have seen, but at least year on year, we are expecting that the market will continue to produce something substantial as far as the companies are going to have good rooms to produce the profit for investors and pay them the dividend. The sustainability can't be guaranteed. But if there is any, for instance, next year, a lot of debt are maturing from the fiscal side. And if we don't take time and it's not well managed and well, maybe we could have that return of money to the economy from the government may create inflationary pressures, and that may affect input cost of some, companies and all of that. And once we start having companies' revenue being eaten fully by expenses, now you see that investors will start exercising caution in the market and would withdraw their allocations or would want to tame down how they allocate money into the market, and that would stabilize the gain. So I think that the outlook looks positive, especially, for now till December. I believe you will earn more than 70. We will end the year more than 70%. At least some 10% may be added to what we have seen, and beyond 2026 is tied to a number of things: the economy, how the businesses will do, and whether they will continue to reward investors with dividend.
Right. As we wrap up, that's my last question to you. So what needs to be done to be able to get a lot more Ghanaians? Because I know that, a well-performing stock market needs people on board and all of that. What needs to be done to get a lot more Ghanaians to come on board? And who is responsible?
Well, I think nearly all the key stakeholders are responsible. One, the regulator side or the market managers, they have a role to play. Of course, they need to make the environment enabling. And I think that so far the environment is very enabling for those who want to enter. I mean, if your shares appreciate and you sell and you have the capital gain tax is exempted for you, so you don't pay tax on the gains that you make from price appreciation. Of course, for dividend you pay withholding tax on it, but for capital gains it's free. And all these 70%, 100% that we are seeing, investors are not paying anything on it in terms of taxes. So the regulator side are seeing to the fiscal side, creating the enabling environment. And also we need to make it accessible, just like the way now you can easily get a Momo account and all that. People are still in confusion. Okay, how do I get in and all of that? So clarity has to be given on the steps, right? The steps to buy, how to check the performance of your stocks, how to select the good stocks. So there's the education bit that has to be intensified. And thankfully, I mean, a number of financial literacy organizations are emerging. The traditional ones that we have we've seen that now on TikTok, you can easily get information on the stock market. But the challenge has been the fact that the misinformation and all of that. And one of my problems is the fact that people are not able to discern what is even the right investment, what is well within the law and what is not well within the law, and all of that. So the education has to be intensified over time. I believe let's get the information to their doorsteps. I mean, on TikTok, on Facebook, on YouTube, and all of that. Thanks to your show as well. I mean, the environment is already enabling. More of the brokers should make it easy for, now for banks, you can easily create an account at the comfort of your home, as in dial a certain code or download the app and all of that. So I believe more of the brokers will also have to invest in infrastructure to make it easy for individual investors, so that at the comfort of their homes, they can be able to, patronize these products. So that's on that side here. So the environment, the education bit has to go in. People need to understand these opportunities to be able to maximize it.
Eben, thank you very much for your time. It's been a good conversation, and I'm really grateful that you came this morning. Hopefully we can speak some more in the coming days.
Yes, a lot more to be discussed.
Okay, so that was Ebenezer Odum. He is a financial analyst, and he joined me in studio. We've been talking about the Ghana stock, the stock market really, and we've seen some gains there. We've discussed exactly what it means for ordinary Ghanaians and also what it means for the economy. It means, and Eben says that, for ordinary Ghanaians, it's actually very positive. And so if you're not in the stock markets, please start considering getting into the market so that you can also eat some part of it, or get your own share of the cake that is being eaten. All right, yes, but that is that, and I'm going to wrap up now because our time is up and we have to go. We're back again tomorrow. Tomorrow is Wednesday. Very interesting conversations also coming up for you, and so please make sure that you join us tomorrow as well at exactly 6:15 a.m. and I'll be right here to serve you that. Thank you very much. And my name is Nitrebi Hammond. Up next, The Brighter Side with Jeremy Okori Amwako. When you think Ghana, think Z. I'll see you tomorrow, and don't stop listening to Z 101.9 FM. Bye-bye.